What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is to provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, before we get started, as per the usual on every weekly update, what we like to do is throw this up. Added the weekly recap to kind of get you insight. I think it's important to know what's gone on over the past week, what to be looking ahead for. And something to obviously point out over the past 2 weeks, the weekly recaps have been quite bulky, if you will. There's been a lot of headlines, and so this is something you have to understand too. All not this past week, you have heard of it this past week, but the week previous, right after Credit Suisse, which was last weekend's debacle, um, essentially things just really kind of died out. We had a lot of still, if you saw any Fed members come up, if you saw, we had the FDIC chair come up and and testify as well this week. All you hear is strong and resilient, strong and resilient. The banking crisis has been eerily quiet. This is definitely not a good sign. Still been some action going on that side of the house because of the fact you have some credit swaps that have been going pretty crazy. We did have another big downfall with MCB Bank, so much so that the CEO just pretty much quit. Apparently, a lot of their deposits were essentially funded by crypto as well. And so, what you're seeing here is you're almost trying to see this blame on crypto. And so, you're also getting uh, this essentially these probes into all these banking systems that have anything to do with crypto. And so we saw that with Coinbase last week. We saw a big kind of outfall and pouring of a bunch of different crypto exchanges the previous week. And then now this week has just kind of been quiet aside from SCB. Now the banks themselves, not this past week, but the week previous, they lost 1.26 billion during that week. And then understand that now, between now and next week, there really isn't a lot going on because we have core CPI next week. So this past week and this week is kind of could potentially be your window for a bull run. As I've talked about, you have normal cycles in a normal market that you have earnings mode, and that's kind of what it seems like is attempting to play out. That on top of the fact that there was like zero uh, banking news going on this week, but there's a lot going on behind closed doors, and so and again, what is very eerie is that a lot of the stuff tries to be covered up to be patched in hopes that it will be patched. Right? You had two of the biggest bank downfalls over the past 2 weeks, and then all of a sudden things are good. That should be concerning. Nonetheless, again, not trying to fear monger at all here, but you're just stating the obvious facts, right? Is what's important and understand that you can't just sweep this under the rug. Nonetheless, the debt ceiling has been reached, right? And to understand that if the debt ceiling isn't raised by July, we could actually default for the first time ever. The U.S. debt to GDP is 126%, higher than even post World War II, which was at 114%. So every time we've breached over 100 from the debt to GDP ratio, you have to understand those have been the biggest crashes in the market, right? And so we are at that limit. And so again, this the strong and resilient that's been portrayed and then the market just running, it's not making a lot of sense, right? There is nothing making sense, and that doesn't justify us to think that we're just going to go up, right? And this is something I talked about. I'm a perma bull, so the reason why I make these videos is to justify is one of the key things you look at when you start laying on risk is to understand where the current market sentiment is, right? And normally we don't have a lot of news like this. Normally you don't have things when things are out of whack and not working properly, there's a big issue and something bigger is about ready to happen. You're not going to know what that issue is until it actually happens, and then it hits the wire, and then stuff starts to freak out. Even if you go back to the pandemic, right? The pandemic, we knew about the pandemic a couple months in advance, but it took months afterwards for that to play out and for the crash to occur. And so you have to understand that this is what I'm talking about, is that eventually get to the point where a piece of news will drop, an event will happen that will crash the market. I'm not saying it will crash the market, but I don't like the current market sentiment, right? Things aren't making sense. When things aren't making sense and being in the market long enough, you know something bad is about to happen. And that's what we're currently set up. And again, the eerily fact that the banking crisis, we've lost two of the hugest banks in a matter of 2 weeks, that things are just okay. To think that we're just going to go back to all-time highs is absolutely absurd in my mind, right? And so, even being said, it doesn't matter if we've pushed up, right? In bear market rallies, much considered like a dead cat bounce, you have a lot of shorts that are covering, so it adds to the squeeze up. So you have to understand that too, and understand how it's essentially being played out. But being said, this past week again, there was a lot of talk about things, and there wasn't really, again, just very eerily quiet. And so the market took advantage of that towards the end of the week. We closed out March, and then now we are essentially moving into a short week. So the market is closed on Friday, and one thing I've noticed is a lot of these schedules are completely off as far as economic schedules. The market is closed on Friday for Good Friday, but non-farms are essentially still scheduled for Friday. So I don't really know how that works, but we'll see what happens with non-farms. Again, non-farms I don't think are going to have as much weight at this point. The market is pretty much in the clear. The market, this is one thing to think about. The market is still, inflation is still sitting at 6%. You got Powell still raising rates, and we have a banking crisis, and yet it's utopic. Again, should be very concerning, right? Institutions aren't just going to come in and buy if they don't know, right? That's something we talk about all the time, is institutions will not go into position if they feel like they don't know what's going to happen over the next 6 months. Right now, you have absolutely no idea what's going on, right? All your indicators are out of whack. That is concerning. That normally leads to a crash because things are just so out of whack that you don't know what's going on. And so, being said, we're going to have to see how we open, right? We have that window. Let's think about the normal cycle that we're in. We're in an earnings cycle, getting ready to go on an earnings cycle. The next monetary policy is until June. The next core is on the 12th. So the week after this next week, we will get new core. Core, again, if as long as it continues to fall down, will be good. Again, it's going to again get sticky potentially on the next drop that we have. And again, you always run the risk that it could start popping back up, right? We've seen demand starting to push back in, which seems to be like the older generation that are buying homes again, because there has been a dip in interest rates on houses. And understand that the sensitivity for interest rates was always going to hit the banks and going to hit essentially the housing market. So any kind of dip, it seems like people are just buying into housing because rental units are still very high. Again, something that's been highlighted on every report, but now it's just being ignored. And you can't, this is the biggest thing, is you can't just ignore what is going on. It is a big issue. And to think that the thing is just going to ride out because they pumped money back into to back the banks, there's a big reason why that's an issue. And understand that just the percentage of the SBB going down took a huge chunk of that wallet. So being said, speaking of banks, we have bank earnings are starting, and something I've been highlighting over the past couple of weeks, especially with this banking crisis, is you always start out with the banks to kind of see what the foundation is on everything that is standing. And especially with the banking crisis, this is even going to play into more what's going on. All these banks, all these big banks, JPM, PNC, Wells Fargo, Citigroup, They are all reporting on Friday, and something I talked about, they are going to report these things on Friday. So if there's any bad news, it will, if the market wants to crash on that Friday, it will crash, whatever the case is, but they can take it into the weekend and then try to come up and devise a plan before the markets reopen on Monday. And so, again, they are trying to control the whole panic situation. This is how you control panic, is by moving stuff closer to the weekends. You can take into the weekend where the markets are closed, address it, have whatever, talk about media, things are grind, things are great. New bull, and that's the one thing I heard this week is we're in this new bull market. How are we in a new bull market? All right, like the sentiment is not there, right? There's nothing that is pivoted. Fed hasn't pivoted. How are we in a new bull market? Because we got new injection of money for the banks, that is our new bull market. uh, I mean, it could be, in a sense, it's hard to tell, but you have to I you can't give it just 1 week from two major banks going down to be like, okay, well, now we're good and now we're in a new bull market. This doesn't make sense. How could you even say something like that, right? It's only been a week. But whatever the case is, time will tell. And understand that, again, there are a lot of indicators are essentially what used to be indicators are broken now. Is that because of the new economy and the new education that people are getting? Potentially, right? All markets change all the time. And something you realize if you're in the stock market at all, that it does change. Nothing is ever the same. There's a lot of similarities, but nothing's the same. But things are really out of whack, so much so that it is blatantly obvious. You can't just ignore it. And to just ignore it and think we're going back to all-time highs, we'll see. I mean, time will tell. But the banks, again, good insight. We are about 2 weeks away from that. And again, all posted on a Friday. Now, looking at, again, something I talk about every week, I go over these options, what they're predicting for the week. Again, SPX has come way down, right? Just 2 weeks ago from the major event for monetary policy, which was up like 100. It was double what it was 2 weeks ago. It was at 120. Now we're back down to normal levels, 60, even below average potentially here at 60. Now they're starting to price more in for the individual stocks. So because we are getting into earnings modes, you'll start seeing an uptick in what is being priced in the individual stocks. So Tesla, your big movers like Tesla, 14, BA is still high at 6. JPM is back down to normal to 3 because the banking crisis is over. Nvidia still sitting at 10s, and Nvidia is still high because of the massive push, and the popularity of ChatGPT has really made that stock just explode. But that's pretty much what I got for the sheet. Now that's what's interesting. Again, it's every time we start pushing up, it's the new bull market. That doesn't. How is that even so? That just still boggles my mind that every time we have any kind of green candles, it's the reverse of the market. You heard it this time. You've heard it. Let's see what this time, reverse of the bull market, right? I mean, it's just nonstop, man. Like the sentiment has not changed. So you can expect another sell off because the sentiment hasn't changed, right? And so this is just, again, my opinion. You can take it for what it's worth. I always suggested that you reach out to other mentors or whoever's out there that provides good content, and devise your own plan. Your own theory is important because it's your money, it's your investments. You need to know how to handle it yourself. So I do this channel to again use it as my own sounding board, as I do listen to my own videos to kind of determine, do I still believe that thesis to be true? And as of right now, again, I think the sentiment has changed ever since the banking crisis started. It's been about a little over 2 weeks now. That is still my primary focus for the next 3 weeks. We need to get through earnings now to really determine. And July is essentially my cutoff, or June is essentially my cutoff window for everything. That if everything is fine and dandy by June, then things will we could. It's essentially when we reverse and start pushing back up in the back half of the year. So normally you kind of start out strong beginning of the year, then you have this natural like die off window or cycle, if you will, between essentially March till June. April is typically a bullish month. Obviously, the market just doesn't go up or just goes down. So you have that in between cycle where it pushes a little bit and then it sells off even more in May, June, and then people just kind of they say go away in June because everybody's on vacation. So, and then the market typically picks back up in the back half of the year, and then October is normally the month that people worry about. It's normally a down cycle, so that is essentially a normal cycle. So as of right now, we are in earnings mode. We are 2 weeks out. Again, we'll start to see bigger moves. I think between now and at least before the next core. And then the core, again, as long as it's continuing to come down, I'm not really concerned about it. Inflation could be done. You can't just think inflation is going to go away, right? There's certain things that are just food and rental units, right? You have to go below some of these data sets that are coming out, right? They've been revised to make things look better, and you have to understand, right? There's people are out there. They're still buy now, pay later, right? They've moved away from banks and they're doing buy now, pay later. This is why companies like Upwork and a bunch of other companies that do offer buy now, pay later are getting a huge uptick because of what's currently going on. So, and then we understand that we may be in a credit crunch, right? That people talk about a credit crunch potentially happening that would essentially cause, this last final stage that I've been talking about to play out. Is that people have been living off of credit cards to keep up with the inflation that's currently going on and the interest rates that are extremely high right now, and having to balance between those two. And if that's cut off, if your only source of resources right now is cut off, and then now you have to start to worrying about housing, right? And that's the big thing is housing is hard to. It's a very slow moving thing, right? There isn't a huge amount of supply out there for houses, and that's when you could get a crash. Is if your huge institutions like BlackRock start flooding the market with houses, because we have seen a huge decline on the West Coast for housing, but a huge increase on the East Coast, which is quite interesting. So again, we will see, but I'll start with the rants and get more into technicals here. Now, technicals, the yellow lines, essentially what I've been using are weekly markers, and then the white lines are essentially the daily markers. So as you can see, again, you can't really justify essentially a new bull market. I mean, nothing has changed. Tell me in this chart where it's changed. There's nothing that's changed. We continue to play the same range. Nothing has changed because the set of the market, nobody knows what the next bad. And the only reason the market doesn't continue to go up by design because there is too much bad news. And so that's something to keep in mind. There's too much bad news for the market to just go on a normal cycle and just start pushing because there is a possibility of a crash. And people are aware, our institutions are aware of that. So they're protecting their money and waiting till it plays out. And so this is this whole waiting game that we've had. So we can't think it's going to be a bull market every time we uptick because we correct every time it does. And again, final stage, we need that break. We need what you need to be looking for is essentially the Fed to actually pivot, right? The bonds are normally a good indicator of that. They are pricing in 4 rate cuts, but you have to let it play out, right? You have to let Powell actually cut rates. You can't jump ahead of the curve here. You have to let Powell cut rates. So, being said, we will see what happens here. But again, we're still playing range. I wouldn't be surprised if we open the week and we kind of just sitting flat roughly around this zone here. So you're roughly sitting around the 4140 mark, and then potentially turn back down and start aiming back to the weekly low at the 3940 mark. Could be a strong possibility. Maybe we break out. The next biggest range would be higher up here. It could potentially even get to the 4,300. So you're essentially looking at the psychological levels where we could be heading here for this week, right? You could even, again, like I said, highlight this potential window up here. Again, the 4,300 could be the next window if that's where we're aiming for here. but we're going to have to see if that does play out or not. So again, if we're going to break out from here, 4,300 is your next range. If for some reason, if we get another week with no banking news, I could potentially see us just push up to that range again. It hasn't been playing exactly on the 43, the psychological numbers, the nice round hundreds, the 300 mark, 200 mark. So we've been kind of roughly landing around the roughly that 4250 could be a strong possibility too. But we'll have to see. Again, the market's just been playing these ranges, and again, every time we uptick, it's a new bull market, and every time we downtick, it's new bear market. So again, there's too much bad news for us to just keep pushing up. So and again, a lot of short covering could have played into this candle on Friday because it was end of month 2 as well. But just realize that from what it looks like from the weekly, it looks like we're going to head and release to retest this. And again, if you want a strong bull market, you want that. You want it to push up, retest, make a new higher low, and then higher high is what you're looking for. So much like this here, you want a new higher low and then continue to push up. That's what you want in general for a strong bull market, and just continue to push up. Right now, these parabolic moves are just absurd, right? This isn't a strong bull market. This is short covering. And a lot of other things come into play, right? Like this is not how you want the market to push. Is this parabolic move like this, right? And because every time you get this, you get the correction. Get this, get the correction. So when this chop stops, will be when the Fed when you get a huge crash and the Fed actually start laying off rates. Then you would get a solid push up, in my opinion. But again, we'll see. So that's what we got for the week. I'm aiming for more of a pullback the beginning of the week for potentially a higher low. Like I said, I think could happen. I think from Monday to Wednesday, we might get a downfall to the 49.43 and then potentially attempt to rise to a new high. If this does gap over this week, I'm looking for that 42.50. But we have to see where we land. Again, the market could go either way. It's a long weekend. I'm recording on a Saturday morning. A lot can happen between now and Monday that would absolutely change the market, like I've always said. So that's something you do have to keep in mind. The dollar, again, I've said this throughout the week. I'm not going over the dollar. As the banking crisis has started, the dollar is just going to be all over the place. And so at this point, it really doesn't matter, in my opinion, where the dollar is at, because now you have your catalyst. Bitcoin again is strong. It's still holding right now. It needs to break the 30K mark. So again, the news that has come out over not this past week, but the week before with crypto, obviously has not phased it. Again, the true decoupling will be tested when more banks go under, and when Fed. Again, we need the Fed to start cutting rates. You need a big event for the Fed to start cutting rates. That has not happened yet. Until that happens, this will not be tested. Bitcoin will not be tested until the market gets to a point to where the Fed have to cut rates. And then at that point, if Bitcoin is its own thing and decouples, at that point, it would be tested. It would be truly tested. So again, to think that this thing is just going to decouple and start running, I think it's the next halving is still a while. You have to also understand it could be a dead cat bounce. I mean, you look at the higher time frames on this thing, and it's just 9 months. It's something that's longer than that. Again, in anything, you have to understand what a dead cat bounce is. This looks like a very technical dead cat bounce. You have the run up, and then you're going to have a massive downslide, and then you get a nice bounce. You could push up to the 3,500 before it rolls over, and then you'll get your last low, and then from that point, then you can continue. But you have to let this play out, and that's exactly what that looks like, as a dead cat bounce, technical wise. So, and then Tesla, the same token. Tesla's been absolutely parabolic and massive sell-off, massive rip up, dead cat bounce. Tesla could even push up, and it's been getting rejected roughly around here, around the 225. And got rejected once here. It's going to attempt for the 225 again. We'll see what happens. And again, these are monthly candles, so this thing could push up, potentially even up to the 280, right? Hit the 280 or the 270 ceiling, and then it could wick back down by the end of the month and just start selling. And that's what I'm thinking could potentially happen there. But again, we go on lower time frames. I play the lower time frames. I don't think months in advance, because you need to take advantage of these moves here, these daily moves. You need to be looking at the smaller time frames as opposed to the weekly. Kind of just to kind of give you perspective, it's good to look at the higher time frames and really see what's going on. So the daily, again, for Tesla, again, massive push here. It needs to break this, like I said, the 220 level. It's been a very hard ceiling here. Again, it wouldn't surprise me. Again, we're still a ways out for Tesla to have. We got till the end of the month essentially for Tesla. So for this thing to just continue up, I mean, I think you're going to struggle here. Could get another pullback, one last attempt here at the 193, one last dip, and then you're going to get one last push. And then if the banking crisis really is over, you would get a break essentially of the 220 and then continue back up. So we'll see how that does play out. Again, you've got this huge gap right here that needs to be filled. And why I think we're going to come back down at least at this level, the 140 level. I've talked about the 140 level. We attempted to come back down and then all of a sudden start pushing up because we're getting back into earnings mode. Like I said, earnings mode is, I mean, you can call it around every earnings, right? You got a couple week window in which the market's going to naturally push up because of earnings. And whether you want to call that a price in, it typically always happens around that time. So we will see what happens here again, but I don't think there's going to be any good news coming from this earnings. I think this earnings is going to be really nasty. Again, you got a bunch of banks going under. You're going to get a lot of exposure and a lot of eyes prying on what's going on with the banks. And in this earnings cycle for Q1 of this year, that's going to expose a lot and could be enough to start tipping things back over and start selling off. But again, you need more. You need something more than just earnings, right? You need banks to actually start going underwater. You need a bigger catalyst. We talk about the banks, but there's still a lot of other things that we talked about that are occurring, right? People are defaulting on a lot of their loans, this car, their home, credit cards, whatever the case is, right? People, all that stuff is still occurring. That stuff hasn't stopped. So it's going to cause something else to break that's going to cause a bigger effect. If more banks go under, people can't make payroll. More people are going to start defaulting, right? You can see how this can cascade into something extremely nasty. And again, it's not at that point yet. We haven't hit the bottom. If we have hit a bottom, the Fed would have paused and started decreasing rates. The Fed don't believe that we are in a bad state. So why would they cut rates? That makes no sense, especially with inflation that's sitting at 6. So you have to keep reminding yourself that this is not a new bull cycle until the Fed actually start cutting rates. But to cut rates, you need a big bad event to happen. That has not happened, right? So with that being said, Tesla, we'll see what happens there. But watching that level there, otherwise, I'm more so favoring the 43. A retest of the 43, and then we'll attempt to do one last test here, the 220, I think, going into the earnings cycle and go from there. So this could essentially have been the earnings cycle pump right here, but we'll see. Again, this is a big move. Like I like to highlight, this is, 42-point move. So that's your earnings cycle, and it could potentially go up even further, right? It just depends on how things play out and what news comes out till then. BA again, still chopping back to that upper level here. This still needs to break 220. If it can't break 220, again, I think it's coming back down. Again, there's a lot of really tight zones in here. And again, I've highlighted this multiple times. BA is still another one. You have this massive move here that needs to be filled and tested. You got Tesla, you got BA. There's a couple of them that still have this hole here that need to be checked and needs to be corrected. You don't. It's like that one little piece that's holding this up, right? And so holding this massive move that it continues to just chop, right? This needs to be corrected and then pushed back up to be stronger. Even if it filled this gap, as long as it held roughly around the 141, right, they could still be considered a higher low compared to what this is on the overall scale. Again, you look on higher time frames, you would see that and see the picture being portrayed, right? So there's still really a lower low here. And if this thing can't break over the 260, you're making a higher low, a lower high. Sorry. And so you have to understand that things aren't in a good situation, and we are in a recession, whether you want to believe that or not. Again, they're not going to tell you till after it passes, right? We're not trying to cause any panic here. So let's see. Now we also got, this is something I didn't even see on the higher time frame. This is what I'm saying. On the higher time frame, if you can see what I'm seeing, what I noticed as soon as I looked at this could be a head and shoulders, right? This is a head and shoulders on JPM. If you know what that technical is, typically this could be considered a shoulder. A head is a bigger move. A shoulder come down here, and then this thing just bottom just drops out. So on the monthly, that's what it looks like for JPM. And it's been holding really well. Again, this is your big bank. So something you need to understand here. Again, this thing has been holding. And again, I'll point this out because we've seen it on the big value play. We've seen it on not only big value, saw it on big tech. This needs to be corrected. You can't have this massive just gap here without anything correcting this. So I'm still expecting the drop down to 110 on JPM. This is why you go with industry leaders and see. And as we've seen across all the charts, they have this big gap here that needs to be challenged. And what I mean by challenge, it needs to be refilled. And then for us to believe that this thing is going to be fine and start moving back up. And again, we saw that when we were riding SPX. There's no point looking over the other charts. I think the other banks have been corrected quite well, to be honest. But if you go back to the other charts on SPX, I mean, even if you look back on this move after, or I should say this move, right? After the pandemic hit, you had a lot of these just weren't retested, and this thing just went absolutely parabolic. But again, you have to look at the time frame you're looking at, right? It was literally just by the dip, and you have to understand this is where people have got their technical expertise from, is from this window here. Most people that are on TikTok and everything else have got their technical expertise from this window. So from there to there, that's all people know, right? That was a 2-year span. All people know is you just buy and it goes up. That's what people are assuming are going to happen here. Now, yes, we are by design. We should be doing that. But we still need to correct, right? We haven't gotten anywhere. How can you say we've gotten to a bull market? Look at where we're at. We haven't really moved, because every time we assume there's a bull market, it is corrected and saying, no, we are not in a bull market. The situation that we're in is currently really, really bad. So again, in my opinion, I think we see a new low. And this is why I highlight 4,200, because that is essentially the check that would fill this gap here, fill this correction here, retest this 3,200, which would be a solid bottom. And then we could go back and start building a bull case, because this was super abnormal, right? This is what was going on here. And again, where a lot of people have gotten where everybody's a professional now because you just buy when it goes up. That's not the case, right? Like, this is the normal. You look at normal year markets, right? This is what happens: is you have these smaller moves. You print 40% of the money supply. This is what happens: 40% of the money supply, and this thing goes absolutely absurd. So, again, just putting in things in perspective. This is where everybody's knowledge is from. That you just buy the dip. It's not the case, right? Like, it's 40% of the money supply. You're going to correct this thing at least back down, to 50% of what this is. Right, you could say potentially 50, but ideally, you don't want to be touching this thing until it touches the 6100. Right, this is why I have this highlighted different here as well. This is fair value, right? Is 61, and when I talk about you need normal cycles, this is exactly what I'm talking about. The normal cycles need to play out, right? 61%, 61.8%. Again, why this is highlighted differently is because that is considered fair value. This is not fair value. Even if it's 50%, this is not fair value. But people are assuming that that's what it is. Your fair value is sitting between the 3200 and the 2800. So fair value is down here. So when the market gets down there, that's actually fair value compared to what this junk is here that we pump 40% of the money supply, and this is what we got. So this is your knowledge base over the past 2 years and where most experts are nowadays that are out there compared to what fair value is. Your fair value is down here. Once the market corrects down there, then at that point would be a pivot, because you would essentially instill so much pain in the market. Banking collapses could drive us down 3,200 to fair value, where the market should be really considered at, and it would still give you a lower high because you would still be above. I go off of body candles. You'd still be over the 2,500, which would be natural, right? This would be a natural cycle. You get normal fair value back because, again, this is abnormal. So to get fair value, you need to be down here, and then once the market's there, the market can continue up and be strong again. But again, correcting this is going to be nasty, and that's why we got this, because you got too many people believing that this is what it is, and it's not, right? Fair value is down here. So with that being said, I made this video super long, but I thought there was a lot of good insight into what's going on, especially a lot more technicals in this one, and understanding that, again, what's going on is not normal at all. So with that being said, if you do enjoy this video, please drop a like and comment as to what you believe and what your thesis is. Again, this is why I have this channel, is for feedback loop for myself. If I could educate people on what I've learned throughout the years, then let that be so. And I appreciate you for watching all the way through to the end. Might as well go ahead and drop a like if you've made it this far. And until next time, I'll see you guys later.